Hey everybody, how are you doing today? It is Tuesday, so that means that it's real estate Q&A day, and today is something for first-time home buyers, right? And well, actually first-time home buyers and people who haven't bought a house in a long time or have owned their house for a while. And we're going to talk about escrow accounts, but we'll get to that in a second. So I'm Joe Hafner, and I am the owner of Hafner Real Estate, and our mission is to help people like you achieve their real estate goals. And the way that we do that is by education, letting people know what they need to know. I had some folks over my house over the weekend, and one of them is a 30-something millennial who we were just talking about real estate because, I love to talk about real estate. That's what I do. But she was talking about how even now, they just bought their first home a few years ago, and she was saying even now she doesn't understand what this escrow account is and why they're paying into it and why the price changes all the time. So we're going to hit that in a second. But if you're a first-time home buyer or you haven't bought a house in a while, it's important that you take charge of your home search yourself. And if you're listing too, for that matter, that you take charge of it. And what I mean by that is, don't allow your agent or the lender or anybody involved with the transaction to just give a quick explanation and fly right past what it is you need to know. If you don't understand what they're saying, what it means, slow them down and make them explain it to you, because this is a huge investment that you're making. So you need to have the best possible information so you make the best possible decisions. There's few things for a home buyer that are worse than getting to the closing table and finding out there was a bunch of stuff you didn't understand and it's going to cost you more money. That is no fun and should never happen. And so it's a partnership between you and your agent. Your agent should be slowing down and explaining things to you, and you should be slowing your agent down to make sure you get explanations when you have questions, when you don't know what's going on. So, I mean, this right here is a perfect example. Escrow accounts, when you've been in the business for as long as I have, almost 25 years, you start to have little things like escrow accounts, that sort of thing, PMI, stuff like that. You think that, oh, everybody just knows what that is. But the truth is, everybody doesn't. We have to learn things. And if you've never bought a house before, why would you have anything to do with an escrow account? So before we get into the escrow accounts, I just want to ask you to do me a favor. Go ahead and go down below and like Hafner Real Estate so that you can get this sent out to you. The more people who like this, the wider range we'll be able to go, and we'll be able to have our mission of helping people achieve their real estate goals happen. So like Hafner Real Estate on Facebook. Go ahead and check out, we've got all these videos. They're on Facebook, and then we also have a YouTube channel where all of them are there right in a row. So if you're looking to buy or sell a house, there's lots of great info there where you can check that out. And then show you care and give us a share. Go ahead and share this video. Tag people who would benefit from this. If you know first-time home buyers, tag them so that they can start learning what they need to do. Don't be the reason that someone you know or love doesn't have all the info they need to have a great experience when buying or selling a house. So tag them, help me share this, help me spread the word that people need to learn the details. They need to be educated on what is going on in real estate. And it goes a lot better for you if you'll just go ahead and pay attention and learn and ask questions. So don't be afraid to ask questions. So let's get to our topic today, right? Escrow accounts. What is an escrow account? Well, I'm going to start with a general definition of an escrow account because there's more than one kind. And then we're going to hone in on a real estate specific escrow account. So an escrow account is basically a trust account. It is an account that a business or individual keeps where money goes in there that does not belong to that individual. For example, in my real estate company, Hafner Real Estate, we have an escrow account, and any money that gets deposited with us that we're entrusted to keep goes into that account. Like if you're buying a house and you have earnest money, which that's another one of those terms I've realized that a lot of people buying a home don't know what it is. And we'll cover that another day. But you have that earnest money where you're putting money down on your house to show the seller that you are serious about buying that house. That money gets held typically in a real estate company or a title company's escrow account. And that escrow account is just a trust account where money is kept for, in my case, in Hafner Real Estate, money is kept there that does not belong to me, that will have to be dispersed to other parties when a transaction is complete. So how does that idea apply to your home purchase? Well, most people who buy a house get a loan of some sort. They get a conventional loan or an FHA loan or a VA loan or a USDA loan. I think I've hit kind of the major ones that are out there that most people get. And most loans, on most mortgages on a house, they require you to set up a separate escrow account that the bank manages for you. So what is the account and why does the bank require that? Well, here's why. So a couple things can happen that can cause you to get into trouble where you lose your house, right? One of them is foreclosure, which that's a whole nother issue. But if you don't pay your property taxes, the municipality that has those taxes, that you owe those taxes to, eventually they can come basically do a tax sale, which is a kind of foreclosure on your property where you end up losing that house. Well, here's the thing. If a tax sale happens, the bank, their loan that they've given you is wiped out by the county when they take, or whoever buys that tax lien from the county or tax sale from the county, they will lose, the mortgage company will lose their mortgage, and the county then takes that property, or the person who bought it from the county takes that property. So they want to protect themselves and make sure your taxes are always paid. So that's one part of an escrow account. So they're going to collect money from you every month to pay your property taxes, which are due once a year in most places. Some places do twice a year, but in Middle Tennessee, they're due once a year. They're going to collect that money enough to pay those property taxes on a monthly basis added to your mortgage payment. That's why you always hear that when people talk about your payment, they say, okay, here's your P&I payment. That's principal and interest. And then you have your escrow payment. So the escrow payment is that money that's used to pay your property taxes and your homeowner's insurance, which we'll get into in a second. So hey, Valerie, how you doing today? Hope you're having a great day. Thanks for joining us. So those property taxes, the bank wants to make sure those are paid because the bank is protecting itself so that it does not have problems if you don't pay them. So they collect that money every month, and then once a year, the bank, or whenever those property taxes are due, the bank takes that money and uses it to pay your property taxes. The other thing that is typically in an escrow account is going to be your homeowner's insurance. If a bank has a $200,000 loan on your house and your house burns down, the bank wants to make sure that they are one of the insured on your homeowner's insurance. So when that money is paid out, they get paid their $200,000. So the two big things for that bank that they need to protect their interests is make sure that your homeowner's insurance is always paid and to make sure your property taxes are always paid. So they require you to put that money on a monthly basis to cover those two expenses, which are once or twice a year you have to pay them. They require you to put that money in every single month so that when those bills are due, they pay them for you. So what they're doing is they're taking you out of the equation and they're protecting their own interests by paying for those themselves. So that escrow account is held by the bank. It's your money that's going in there. It's just going to pay those property taxes and that homeowner's insurance. So what happens is, you'll see this when you sell a house, a month or two after you've sold the house, whatever money was left in that escrow account comes back to you because it's your money. So that money would come back to you. So you get a check, a month or two after you've sold your home, where you get whatever was left over in the escrow account. So why does that escrow account fluctuate? Well, prices for homeowners insurance and property taxes fluctuate. So at the end of the year, the bank does an escrow analysis where part of their arrangement is you have to have a minimum amount of money in that escrow account at any one time. So if your balance drops below that amount anytime during the year, they know when they do their analysis that they need to require you to pay more money into that escrow account. So what happens is most banks, the way they're set up is after that analysis is done, if there wasn't enough money going into that escrow account every month, they're going to ask you to pay more money each month so that you get the right amount in there. And then they're going to ask you to either pay a lump sum or take the amount that you are below the threshold of the escrow account and divide that over the course of your 12 months for that coming year. And that causes your monthly payment to go up a little bit. Normally, in most places, it's not going to change drastically, maybe $20, $30 here or there either way. So that's why the escrow account has that impact on your payment. So your payment every year might adjust slightly. So there you go. That's what you need to know about escrow accounts. So if you are a first-time home buyer, you need to go to my YouTube channel, look down below or to the side, depending on what device you're looking on. But there is a link on that YouTube channel that has all the real estate Q&A that I've done, where you can learn lots of great info about what you need to know to buy a house. Be an educated consumer and go ahead and learn some things so that you have all the knowledge to be able to make smart decisions when you buy your house. If you've got an agent who won't slow down and answer your questions and explain things to you, I hate to say it, but give them the heave-ho and go find an agent who will do that for you. Our job as agents is to make sure that you are highly educated and you know exactly what's going on in the process of buying or selling a home, so you make smart decisions. There's my phone going off. I should have shut that off. Anyway, so that you make smart decisions so that when you get into that house is a blessing to you and you don't have unexpected things happening to you. So again, do me a favor, show you care, give us a share this video. Go ahead and tag anybody who you think would benefit from it. Like us at Hafner Real Estate, and we will be back in 2 days on Thursday. By we, I mean me. I'll be back on Thursday to share some more info. If you've got questions, put them in the comments below, and I'll come back through and answer them, or private message me or call me and let me know what your questions are. Of course, I'll answer them to you, but we'll answer them here as well so that we can achieve our mission of helping people achieve their real estate goals. So look forward to seeing you next time. Have a fantastic day. Thanks for joining me.